There is a number that, if you do not write it down in the next 10 seconds, will cost you money today. That number is 1.1475. I'll say it again, 1475. Euro to US dollar is currently trading at 1.1425, up exactly 1 pip in the last 24 hours. That tiny move is the bait. Most traders see the short-term charts flipping to a strong buy and they start clicking long. They do not see that the weekly trend is screaming strong sell, the daily trend is a descending freight train, and price is stuck beneath every major moving average that matters. What we have on our hands right now is not a reversal. It is the perfect bull trap, one of those rare moments where retail gets crowded onto one side, and the institutions squeeze them out before the real move. Over the next 12 minutes, I am going to give you that one danger zone, the one invalidation level that proves the trap has failed, and then we execute. 2 scalping strategies, one for the open, one for the liquidity grab, and one swing trade that aligns with the weekly trend. You stay to the end, you will have a complete trade plan with exact entries, exact stops, exact targets, and the one level tomorrow that could flip the entire monthly structure. And right now, if you're watching on a silent device, look at the screen. I'm putting up the core phrase you need, 1.1475 bull trap, 2 scalps plus 1 swing. Read it, memorize it, then turn the volume up. Now, instant market verdict. In one sentence, today's session is a fade. The rip market inside a strong bear trend. We are not chasing the 1 hour and 4 hour buy signals. We are using them to find exhaustion so we can sell into strength. The single level that flips my entire bearish bias is a daily close above 1.1520. If that happens, the structure resets, and I'll be the first to admit the downtrend is in danger. Until then, we fade. Write this down. 1.1389, today's S1 support, is our intraday line in the sand. If we break and hold below 1.1389 with volume, the bounce is officially dead, and the bear trend accelerates. But here is the micro insight that makes this truly dangerous for the unprepared. The herd is piling into longs from the 1.1380 zone, looking for a swing low, because an ECB official named Doleenic said the bank may hold rates in July if Middle East tensions ease. The market is trying to price in a less dovish ECB. Yet the commitment of traders' data and positioning from institutional desks shows that macro funds are still selling euro to US dollar into any spike towards 1.15. When the herd is buying a fundamental headline in the direction of a counter-trend move, they are standing on quicksand. That is exactly where we come in as traders. We don't predict, we react, and we take the other side of the weak hands. Let's go deep into the technicals, because this chart is a masterpiece of conflict that creates profit. Start on the weekly frame. The weekly trend is a strong sell. Our weekly moving averages are sloping lower, and price is trading. Below the MA200, the 200-week moving average is a wall. That is the anchor. Pull it down to the daily. Daily trend. Strong sell. Price sits at 1.1425, which is beneath the MA20 at 1.1475. Beneath the MA50 at 1.1556, and buried under the MA100 MA200, both around 1.1605 and 1.157. When price is below all 4 key daily MAs, there is no sustained bid. The ADX is 37. That means the trend has strength, it is not a weak drift. RSI 14 is 38.98, slanted upward ever so slightly off the oversold border, but still firmly in bearish territory. The stochastics at 29.67 are trying to hook up, which is the engine for this bounce. And here's what most traders miss, the hidden divergence. Look at the daily MACD. The MACD line is at minus 0.007, still below the signal line. But the histogram bars have started to contract, meaning downside momentum is easing. That contraction gives the illusion that a bullish reversal is imminent. However, on the 4-hour chart, the MACD is already curling up from deep negative territory, and price has just posted a series of higher lows. The 4-hour trend is now a buy, the 1-hour trend is a strong buy, that short-term momentum is real. but the 4-hour MA60 is coming in right at 1.1462, our R2 resistance, and the 4-hour MA200 is at 1.1510. So even the shorter-term structure is boxed in by heavy resistance. This clash between the daily bearish tidal wave and the 4-hour bullish ripple is exactly what forms a high-probability bull trap. The trap is set when the 1-hour strong by Lewis traders above 1.1440, right into the daily MA20 resistance at 1.1475, where the selling pressure is waiting. Now let's talk levels. Support 1, 1.1389, which aligns with yesterday's low and the bottom of an intraday value area. Support 2, 1.1358, which is last week's swing low. Support 3, 1.1337, a structural level from 2 weeks ago. On the resistance side, R1 is 1.1441, the immediate ceiling, R2 is 1.1462, and A3 is 1.1493. The pivot point sits at 1.1410, which has been acting as a magnet all morning. For the trap to spring, we need price to breach 1.1441 convincingly, then stall and reverse before or at 1.1475. That is the optimal danger zone for the bulls. A break above 1.1493, and especially a daily close above that, would damage the bear thesis. But for now, I'm selling into that 1.1440 to 1.1475 corridor. Let's link this to the fundamental driver and the crosser set web, because this setup does not exist in a vacuum. The core 24-hour news is that ECB's Doleenic said the bank may hold rates in July if Middle East tensions ease. The logic chain is, easing geopolitical stress reduces energy shock risk, which lessens the need for a rate cut to support the economy. The euro caught a tiny bid on that headline. However, here's what that narrative misses. The US dollar is not weakening on this. It's holding firm because the Fed's next move is still deeply uncertain, and US yields remain elevated. The euro to US dollar 2-year yield spread is still favoring the dollar. Meanwhile, if we look at the risk asset shadow, Bitcoin and S&P 500 futures are not breaking out in a risk-on surge that would typically lift euro to US dollar. They are choppy, which tells you this euro bounce is fragile and not part of a broad dollar sell-off. The geopolitical heartbeat from oil is also worth watching. Any escalation in the Middle East actually drives safe haven dollar demand, which would crush euro to US dollar. Doleanic's conditionality is a double-edged sword. The 1 to 2 week directional lean is this. We are likely to grind lower toward 1.13 once this short covering exhausts itself. The event that invalidates this entire bearish call is a weekly close above 1.1550. That would be the first higher high in 2 months. I want you to do something for me right now. Comment below. Do you think euro to US dollar breaks 1.1300 this week? Yes or no? I'm tracking this community's consensus, and the answer will tell me just how crowded the short side is. Do it now, drop that yes or no, because we're about to get into the execution. Most people skip this next section. They watch the levels, they watch the news, and they leave before the trade plan. That's exactly where the money is made. Keep watching. I'm going to give you 3 specific trade setups with exact trigger conditions, exact stops, and exact profit targets. Then I'll show them on screen so you can screenshot them. If you're not here to execute, you're just entertaining yourself. Let's change that strategy. 1. The opening scalp. This is a long scalp, a fast snipe, exploiting the short-term bullish momentum that's still alive. I'm calling it the opening scalp because it works best during the London session heat. The trade is based on a structural support retest. Here's the condition. We wait for euro to US dollar to drift back down to 1.1410, the daily pivot, and we need a specific trigger. On the 5-minute chart, we want to see a bullish engulfing candle form immediately after price taps 1.1410. The low of that engulfing candle must not break below 1.1405. Entry is at 1.1412, with a tight stop loss at 1.1395. Just below the pivot and S1 confluence. Take profit 1 is at 1.1435, which gives us a 1 to 1.5 risk reward. If momentum really kicks in, We can hold a runner to take profit 2 at 1.1445, right under our 1. This scalp is void instantly if the 5-minute candle closes below 1.1410 before the engulfing prints, or if the spread widens massively during news. I'll now put the trade card on screen. Grab it, the opening SCALP entry, 1.1412, 5M bullish engulfing after 1.1410 tap, stop loss, 1.1395 take profit 1, 1.1435 take profit 2, 1.1445 risk, reward, 1:1.5 R, 1:2.7 R if TP2 hit, invalidation. Void if 5M candle closes below 1.1410 or before engulfing form strategy 2, the liquidity grab. This is a counter-noise scalp that hunts the stop losses of early short sellers who are positioned above resistance. The idea is a fake breakout above a 1, a snapback, and a quick ride back into the range. The most likely zone for this is right at 1.1441, but to be safe we look for a stop hunt just above it. We need a scenario where price spikes to 1.1445 or 1.1450, prints a 15-minute candle with a long upper wick, and then reverses aggressively with a bearish Maribozu. Entry is at 1.1445 on the close of that reversal candle. Stop loss is placed at 1.1465, above the fake-out spike, just beyond the wick. Our singular target is the nearest intraday liquidity pool. That's 1.1410, today's pivot. That's a 35 pip target for a 20 pip risk, nearly 1 to 1.75. The warning: this requires fast fingers. If price doesn't snap back within 2 15-minute candles after the spike, the trap has failed and we cut immediately. This is a pure stop hunt play, and it works best when the herd is leaning against the initial breakout. I'll overlay the trade card now at the liquidity GRAB entry, 1.1445, 15M bearish reversal after spike above 1.1441, stop loss, 1.1465 take profit 1, 1.1410 risk, reward, 1:1.75 R invalidation, void if no reversal close within 2 15M candles, also void if spike clears 1.1470 cleanly before I move to the swing trade. I want to ask you directly, are you scalping or swinging this week? Comment scalp or swing right now. I want to see where this community sits. It tells me how your risk appetite aligns with the market's rhythm. Go ahead, strategy 3, the session swing. This is the big one. This is the trade that aligns with the 4-hour and daily bearish trend, the one that can run for days. The swing trade is a short from the bull trap zone. The trigger: we wait for euro to US dollar to rally into the 1.1465 to 1.1475 resistance area, which is the daily MA20 and the 4-hour structural resistance. On the 4-hour chart, we want to see a clear bearish rejection candle, an inverted hammer, a shooting star, or a bearish engulfing, with the MACD starting to roll over. Entry is at 1.1475, on the close of that 4-hour candle. Stop loss is placed at 1.1525, just above the daily swing high and above the 4-hour MA200, giving the trade breathing room while still defining risk. Take profit 1 is at 1.1355, which is just above S2 support. That's a 120 pip target. Take profit 2 is the stretch target at 1.1305, a level that aligns with monthly S3 and a deeper liquidity pool. That gives a risk reward of over 1 to 3 to TP1, and nearly 1 to 5 to TP2. The trailing stop rule: once price reaches 1.1415, halfway to TP1, move your stop to break even at 1.1475. The medium-term invalidation for this swing is a daily close above 1.1525. If that happens, the bull trap thesis is dead, and we stand aside. This swing trade is not a scalp, it's a session hold, a trade you let breathe for 1 to 3 days. I'll put the full trade card up to the session SWNG entry, 1.1475, for H bearish close below MA20 after rejection, stop loss, 1.1525 take profit 1, 1.1355 take profit 2, 1.1305 risk, reward, 1:3.2 R, TP1, 1:5.4R, TP2, invalidation. Daily close above 1.1525. Then adjust to neutral risk management pulse, 30 seconds. Of truth. Never risk more than 1 to 2% of your account on any single trade. For scalps, that risk is even tighter. I cap mine at 0.5%. Stops are non-negotiable. You put them in immediately. You do not move them away from price. No positions through high-impact news like the ECB meeting or US CPI. This is how you survive to trade the next explosive move. If the swing trade stop of 1.1525 is too wide for your account, size down, or take only the scalp plays. Protect the capital first, because the market will always give you another setup, now close and retention loop. The single most critical level for the next session is 1.1389. If we break and close the day below that support, the bull trap narrative is confirmed, and the swing short trade is in full motion. What's tomorrow's wildcard? We have the US ISM services data, and more importantly, the daily chart will be at an inflection where the MA20 comes into play. If the price fails at 1.1475 today and starts rolling over, tomorrow's session could accelerate the drop. If 1.1389 breaks, the whole monthly trend structure takes another leg down, and I will have an updated blueprint for you exactly 24 hours from now. And here's your binge loop. If you want the full breakdown on Bitcoin and the S&P divergence, how the risk asset shadow is flashing warning signs, that video is live now. Tap the end screen. Then hit the bell, because tomorrow's alert lands before the open, and you do not want to miss the next move. Hold the like button and subscribe. Every signal helps the algorithm deliver these levels directly to you. End with silent on-screen text, white on black, scalp the noise. Swing the trend. I'll see you in the next one.